Welcome to The Explainer. Today, we're diving into what is, honestly, one of the most important numbers for any business. Think of it like the ultimate financial health check, net profit margin. So here's what we've got on the agenda. We're going to kick things off with a big question that pretty much every business owner has to deal with. Then we'll break down the key numbers you need to know. After that, we'll figure out what a good margin even is, how to spot the red flags if yours isn't so great, and of course, how to create a plan to make things better. And we'll finish up with a really important word of caution. Okay, let's just jump right in, shall we? We're starting with a scenario that, believe me, keeps a lot of business owners up at night. So, picture this. Your sales are going up, and that feels great, right? But here's the catch. Does more revenue really mean your business is healthier? Well, not necessarily. You see, revenue, that's just the headline. The profit margin, that's the real story. It's the vital sign that shows you what's actually going on under the hood. All right, so to really get the full picture, we've got to peel back a few layers of this whole profitability onion, because it turns out it's not just about one profit margin. Nope, there are actually three key types we need to get our heads around. First on the list is gross profit margin. So what's that? It's basically the profit you make right after you subtract the direct costs of whatever it is you sell. Things like raw materials or the labor needed to make the product. This little number is super important because it tells you two things. One, is your pricing on point? And two, how efficient are you at actually producing your stuff? Okay, let's go one level deeper. Next up is operating profit margin. Now, this one takes into account all those day-to-day costs of just, running the business. We're talking rent, salaries for your admin staff, marketing budgets, all that good stuff. This number is all about showing you how efficiently your core business operations are running. And that brings us to the big one, the grand finale, net profit margin. You've probably heard it called the bottom line, and for good reason. This guy accounts for everything, every single expense, including stuff like interest on loans and taxes. It is without a doubt the ultimate test. It shows you what percentage of every single dollar you earn you actually get to keep as pure profit. And here's where it all kind of snaps into focus. I like to think of it like this. Gross margin, that's your report card for how well you make and price your product. But net margin, that's your report card for running the entire business. It really is the final word, the ultimate verdict on your company's financial health. Okay, so you've done the math, you've got your net profit margin number staring back at you. But is it any good? Because let's be real, without context, a number is, it's just a number. So what is the magic number? Now, it definitely varies. But a good rule of thumb, a common benchmark, is about 10%. If you're hitting 10%, that's generally considered pretty healthy. If you're down around 5%, that's kind of low. But if you're up at 20% or even higher, whoa, you're playing in the big leagues. At the end of the day, that one single percentage tells you a really powerful story. A high margin, that tells you the company is running efficiently and making good money. A low margin, on the other hand, is like a big flashing red light. It's a clear signal that something's off. Maybe your pricing's too low or, and this is usually the case, your costs are just getting out of control. But, and listen, this is a huge but, that 10% benchmark can be super misleading. What's considered good changes completely depending on the industry. I mean, just look at this. A grocery store might be scraping by and happy to do so with a razor-thin margin under 2%. Meanwhile, a software company could be pulling in over 20%. It's like they're playing two totally different sports. And this chart just lays it all out, doesn't it? I mean, look at that massive gap between retail and software. It's just huge. And this is why context is everything. You absolutely cannot compare a grocery store to a software company and expect to learn anything useful. It just doesn't work that way. All right, so what do you do if your margin is looking a little underwhelming? Or maybe it's way below your industry's average? Well, the next step is to play detective. We need to diagnose the problem. So let's dig into some of the usual suspects. Most of the time, a low margin can be traced back to a handful of common culprits. Maybe your pricing strategy is just wrong, or your overhead costs, rent, salaries, that kind of thing, are getting a little bloated. Sometimes it's the hidden costs that get you, like how much you're spending to get new customers. And let's not forget about good old competition, which can always put a squeeze on your profits. But here's the good news. Once you've figured out what the problem is, you're not just stuck with it. You can actually create an improvement plan with clear, actionable steps to get that bottom line looking healthy again. So here's a 5-step playbook to help you boost that margin. Step 1, put every single expense under a microscope. Seriously. Step 2, take a hard look at your pricing. Is it right? Step 3, find ways to make your operations more efficient. Step 4, really focus on keeping the customers you already have. It's almost always cheaper than finding new ones. And finally, step 5, build a brand that's so strong people are willing to pay a premium for it. And just remember, this isn't all about taking a scalpel to your budget. Improving your net profit margin, it's really a two-sided coin. Yeah, you've got to control costs, but you also have to be just as focused on smartly growing your revenue and making your customers so happy they never want to leave. Now, look, net profit margin is an incredibly powerful metric. It really is. But before we wrap up, I've got a quick word of caution for you. You just can't look at this number all by itself. It's got some pretty big blind spots you need to know about. Yeah, you really have to be aware of these. For example, a one-time thing like selling off a big piece of equipment could make your margin look amazing for a quarter, but it's not sustainable. And maybe most importantly, it tells you absolutely nothing about your cash flow. And this is so critical. A company can look profitable on paper, but still go bankrupt because it literally runs out of cash to pay its bills. So I guess the big takeaway here is this. Think of your net profit margin as just one dial on your business's dashboard. It's an important one for sure, but to get a real reading on how things are going, you've got to look at it alongside other things, like how fast your revenue is growing, your return on investment, and of course, how happy your customers are. So we'll leave you with this to think about. Your net profit margin, it's not just some number on a spreadsheet. It's a story. It's a narrative about your business, how efficient it is, what its strategy looks like, and how healthy it is, really. So the question is, what story is yours telling?